Welcome everybody to our Bay Area Housing Market Town Hall. Today I'm so excited. Michelle is going to be talking to us about most people probably been thinking about is the fire insurance, flood insurance, and earthquake insurance. As always, I want to invite you guys to join us on YouTube. I'm so excited. A lot of you have subscribed, and we now surpassed 1,000 subscribers. Thank you so much for all the supports, and we will continue to produce educational information for you guys so that you can be educated in the real estate market. Well, now I want to introduce you to Michelle Lin, and she's the broker for Red Wave Insurance. She's a person that has so much knowledge about insurance products, and that's why I wanted to invite her to talk to you about what are the residential insurance coverages that you should really pay attention to make sure that you're well covered. Well, hi, Michelle.
Hey there, how's it going? Let's dive into it because it's a lot of information to share and to squeeze it in. Property insurance can be so complicated, but I wanted to really break it down for you guys. Is really about property perils. When we talk about home insurance, or clients ask me, can I get home and fire? Well, they're essentially the same thing. So your home insurance is going to really cover your dwelling, right? Any covered losses within the policy would be wind, hail, fire, water losses, and stuff like that. Then we have earthquake insurance. That's when we have earth movement, and it can cause your house or your belongings to be damaged during that earthquake. And the last is flood. The flood insurance is for inundation of a lot of water that is coming down, could flood your property and could damage your insides and your outside of your home and your property. So just remember, in California, your home insurance does not include earthquake or flood. All right. That is very important to know because a lot of people don't know this, and they need to know that these are the two perils that are not a part of your home insurance. Okay. One of the big things that a lot of my clients ask me is earthquake insurance worth it? Is it really worth it? Well, when you buy your home, you will get a natural hazard disclosure. It is good for you guys to review that particular disclosure. It will tell you where your proximity is to an active fault line. So if you're in, the East San Jose Hills, you're on an active fault line. Okay, so you really want to find out where your home is in the proximity of those active fault lines. Then we want to take a look at frequency of the earthquake in your area. Is there a lot? Is there one every month? Is there one, every week? What does that look like? And should we be that concerned, right? How much time has passed since the last earthquake, right? Is it one after another, the aftershocks and stuff like that? What's happening during that, time frame? Okay. Then we want to look at your home construction. Was it built in 1910? Well, the construction was completely different than if your home is now built in 2000. So we look at the construction and was it, built with, the next one is whether the house was built with earthquake preparedness. Homes that are built now, they'll have crippling walls, you'll have the strapped down water heaters, you'll have a lot of things that will allow your house to move with the earthquake, right? When you have an older home, that's not necessarily true. And then you'll probably have a lot of settlement of the soils and stuff like that, and your house could crack. And well, there you go. Then you should literally get earthquake insurance, right? We look at the type of land. Is our land, the house that is built on, is it sand, like San Diego, or is it on rocks, maybe on the East Bay where it's, hillside, right? So depending on what that foundation is, your house is built on, we then can determine if there's something that could cause our house to crack or to slide, right? And then how much of a slope is your house on? Are you living on a hill? Is it on flat land, or is it on a hill on a slope, right? So these are things that you really want to consider when you're looking at earthquake insurance. And of course, lastly, is the cost to insure the house with that earthquake policy. Is it extraordinarily really expensive that you can't afford it? Or is it something that's within your budget that you think that, yeah, I can afford it because this is where I'm located. I'm next to a fault line, and my house is not really that stable. So probability of my house going down that slope is probably great. And so it's not going to cost me that much, but it's worth me buying it. Okay. And then we're going to move on to your flood insurance. What is flood insurance? You know, most people who know flood insurance are the ones that are required to get flood insurance because their lender is forcing it upon them. When you're buying a house and you have a lender, the lender will typically run a flood determination to determine if you are in a special flood zone. And if you are, they're going to force you to buy flood insurance, right? So flood insurance is for those heavy or prolonged rain, melting snow, or coastal storm surges. It could be overflow of inland or tidal waters, such as rivers that can overflow. Could even be creek beds in the back of your house. Mud flows over areas that are normally dry, or levee breaks. Like we know here in San Jose, Morgan Hill, they were going to release the waters from the dam. Well, it went all over the place. It was just a mess, a complete mess. So it's not to say that people who are in flood zones are the only ones that are going to be prone to flood. We can be in anywhere, and you can be considered to be in a flood zone. Because look at it. Last month, we were inundated with so much rain. You can be flooded in your own way. It could be that your house was, maybe your sidewalks or your ground was going towards your house, and the water just inundated you and your house, and it just started to build upon that, right? So it is not to say just special flood zone people are, going to get flood. Even the ones that are not in flood zones could get flooded, all right? So we just want to make sure that we look at our house, we look at our situation, and what is the probability of us getting flooded, and especially after these storms, take a look at your situation. And there are FEMA policies and there's private flood policies. Private flood policies, I can average around $800 a year or even less. And for people who are not in special flood zones, could even be $300 a year. So it may be really worth your time to purchase a flood insurance and, research this. Okay. Now let's go into the types of property insurance. And a lot of people need to really understand property insurance and what kind should I get. Your first and typical and common one, if you're an owner occupied, you would get a home insurance. Okay. It's a different type of coverage because typically home insurance will have a higher personal property coverage than if you were a landlord. Okay. The next one, of course, the landlord one is mostly for investors who buy properties that are rented out. Usually the coverages are less on the personal property, but more on the coverages as a landlord, like wrongful eviction, discrimination, those types of things that are covered within the landlord realm. Condos are ones that are either townhouses or condos. Usually there might be an HOA that will cover the exterior and you're responsible for the interior. And it really depends on each HOA on how they're going to cover that particular property, both the condos and the townhouse. And I'll go over that in the next slides to kind of describe to you what the 4 different ways that we can cover a condo, all right? Renovations, you definitely want to let your insurance agent know if you're going through some major renovations, because in your home insurance policies, it will have exclusions, or they could talk about, hey, if you're under renovations, we may not be in that type of business, and we may not cover that kind of stuff. So you have to be very careful. And then if you're doing major renovations and you're moving out and it's, vacant for over, 30, 60, 90 days, there will be, clauses inside your home insurance policy saying, hey, if you're gone after, 61 days, we can actually exclude a lot of these coverages. It might be water damage, could be, certain things that renovations could cause. And they can say, hey, you know what? You didn't tell us we were under renovations, so therefore we're not going to cover, right? So be very careful. Talk to your insurance agent before you do those renovations and ask them, do I have the right policy, all right? The next policy is a vacant policy. You may be selling the house, you may be renovating the house, you may just be keeping it because you inherited the house, you have no idea what you're going to do with the house, but it's vacant. Your homeowner's insurance policy is not going to cover those vacant policies. There's so much more risk because you're not checking in the house every day. You're maybe not even there 30 days or 60 days or 90 days, doesn't matter. It's vacant, and it just carries a higher risk. So be careful with those types of properties. And the last one is, of course, in construction. This is literally taking the house maybe all the way down to the ground. It could be taking it to one wall and there's really no house left. These types of policies will help you insure the property as you go. As the frame is going up, as the sheetrocks are going in, as the roof is being put on, it will cover the home as appropriated in that scenario. And it also covers, like, materials in transition or in transit, the trucks that are, bringing in all your wood, something happens to that truck, rolls over, and you got to go buy that, material all over again. Okay. So be careful with what type of policy you're getting and make sure that you have the right one. Because I've seen a lot of homeowners that move out of the house. They don't tell me. They buy another house and they're living in that house, but they forgot to turn the first home into a dwelling fire, which is your landlord policy. Okay. So check your insurance. So going into the condo owners, these guys, you guys have to be very careful with this because there are 4 different ways in which, any insurance can cover you. The first one is all in, means that everything in exterior, interior, everything's covered to whatever was built there, and they're going to cover it to replacement costs. All right, that's number 1. Number 2 is single entity. What does that mean? It includes the unit's interior. Okay, so builder's grade, whatever the builders built. Okay, excluding any betterments and improvements. So if you improve it with granite countertops, laminate floors and stuff like that, that's improvements, and you got to cover that portion of it. Okay. Bare walls, it means that it excludes the exterior and anything inside. So stud walls in, that's all your responsibility. Okay. And the last is the PUD, they only cover the common areas, but the interior and exterior, they're all yours. You have to take care of both. Okay. So be very careful, read your CCNRs carefully, go to the insurance side. It will tell you what the HOA is responsible for, and then what the unit owner is responsible for. Okay. Next is home coverages. There's 2 types of different home coverages. One is the HO3, one is the HO5. When we talk about the HO3, we're just really talking about open perils and named perils. So your house is typically under open perils for both the HO3 and HO5. The personal property on the HO3 is a named peril. So whatever is listed on your policy is the type of perils which they would cover on your personal property. Whereas the HO5, it's an open peril. Unless they tell you it is excluded, right, then they will, cover for all the perils. Okay. And again, your flood damage is not, covered, mold, earthquake, pollutants, insect and animal damages, and wear and tear is not ever covered in your policies. All right. Just kind of giving you a more visual side of it. Your homeowners typically covers your weather, which is your hail, lightning, and other weather events, damages to your roof, windows, sidings of your house. Right? Falling trees, branches, any of those types of things. Of course, fire, which is part like smoke, you have kitchen fires, anything that is, in your garage could, combust, they cover that. And then typically your theft and vandalism. Okay. What is not covered again is your flood, earthquake, and maintenance on your house, not covered. All right. So the dwelling coverages, this is for your landlord policies. They have the DP1s and the DP3s. Typically, the DP1s are the lowest cost, but of course, comes up because it has a lower cost. It's based upon actual cash value, and actual cash value is, what it is minus the depreciation, and then you get, the actual cost. And it's also on a named peril basis. Okay. Whereas a DP3, which is mostly what investors should get for rental properties, it's an open peril. Everything's based upon replacement costs, and it's going to be the best for, rental properties. Okay. And again, just reminder, vacancy clauses, it's unoccupied for 61 days, it will reduce coverages on your policies. Okay. So this is the main type of home insurance coverages that you might have. Your typical dwelling, which is your main structure, okay? Anything that's attached to it, your decks, your porches, that's all part of the dwelling coverage, all right? Other structures are your detached garage, your gazebos. They're typically 10% of your dwelling. So it's a percentage. All the carriers do for the first three coverages, the other structure, personal property, and loss of use is typically a percentage. Okay, so you can't go beneath it, but you can always go above it if you need to have more coverage.
What
Personal
about
property,
ADU?
ADU, if it is a unit with a bathroom, in a room, it has, if it's a separate unit, then you need to get a separate policy for an ADU. Okay. Another structure is more like something that is more a gazebo, a detached garage. It has no real function behind it. No one's living in it. When someone's living in it, it's a whole different situation. Okay. Personal liability, very, very, very important here. If anyone gets injured on your property, they find you negligible. This is what we call lawsuits, right? Anything liability and legal lawsuits, that's the area. So I always recommend 300,000, if not greater, because this is trying to protect your assets, your net worth in this particular. So always look at this particular section. And then you have your medical and your deductible. The liability, medical, and deductible, you can choose the type of coverage that you want, and it's not a percentage of any dwelling. Okay. All right. Everyone's asking now, why is my home insurance prices going up? Well, guess what? Last year was the start of it. Inflation costs of building materials and labor has been going up and up and up, and people don't talk about it anymore, but supply chain issues, big problems still. We are waiting 6 to 8 months to get any product. Could be a window, it could be a door, it could be anything, right? And then also natural hazards, disasters that have been happening for us in California, 2018, 19, 20, 21, all fires, right? 22, thank goodness we didn't have fires. So as long as we are on that trajectory of not having fires, it will help us in the long run. We've also, our increase in claims have gone up. And then of course, fraud and litigation has also been going up in the last several years. So, typical price of insurance policy has risen by 10% as of 2022. Okay. All right. Some insurability perspectives, when you're buying a home, things that are happening, you always want to take a look, especially your new home buyers. Previous losses on the property, right? There are some carriers do not allow for previous losses. They won't even take it at all, right? Some carriers will look at it, but then as long as it has been repaired and in good condition, they'll take it and they'll be okay with it. So take a look at the losses and you'll see that in some of your disclosures if there was any claims made on the property. Location of the property, oh my goodness, if you are living in the hills, start looking at insurance right away, because there are carriers that have literally walked away, blocked out zip codes, and they are not riding in those areas. So you need your time to go and research this. Roof, heating, and plumbing, and electrical updates. Have they been done? If you have a 1910 house, you better start looking and making sure that the updates have been done, because if it's not, carriers will refuse to insure those properties, especially those electricity. When there's knob and tubes, they don't like that. They want the circuit breakers, okay? Age of home, that matters. Some carriers will not take homes less than like 1960s. They want newer homes. So that could also cause problems. And the last is designated historical homes. Most people don't realize that, but a lot of carriers will not take those types of homes. So there's only very few carriers that will actually take that kind. All right. Replacement versus actual cash value. People always ask me, how do I come up with those numbers? Well, all the carriers use a 360 valuation to do replacement costs. This does not include land. So do not mistaken that market value equals replacement costs. No, we're not looking at that. We're looking at what it will take for us to rebuild that house. So it's based upon the amenities of the house when it was built, square footage, and all the insides and the exteriors of the house, and it's how we come up with the replacement costs. And again, actual cash value is replacement minus depreciation. So, depreciation is a decrease in value due to wear and tear or age. Okay. Options for people who have home insurance that is canceled. Okay. Way too many losses, could be the houses in the location, which is huge fires, you're getting canceled. So instead of looking at preferred carriers, you're going to have to move yourself downwards to standard carriers. Standard carriers can usually do a little bit more, willing to reach further into those fire zones. And you just got to, take a look at some of those. You might not know many of them, but you can talk to your brokers. Brokers work with a lot of different insurance carriers, and they can pretty much get down to a lot of standard carriers and find carriers that were willing to take you due to losses, or it could be location, could be age, or the historical homes that you might have. And the bottom of it all, that if nobody will take you, the California Fair Plan will take you. Okay. They don't want to be your top one to take. They want to take you only when all things fail, then they will take it. So, do your due diligence and try to get down to, before you get down to the California Fair Plan, try to find a different carrier before you get there.
I can't tell you how many times we get asked this question nowadays because of the fire situation. That have bought the house close, may not even be in the hills, just because they're close, and their policy get canceled, and it's very scary, especially for some of the if they're living in a community where they have the HOA, they have the insurance policy, and then that gets canceled. All of a sudden, they have to find something else that's a lot more expensive, which bumps up their HOA fees with a special assessment.
Yeah, and so there are some carriers that are coming back into the area. They just have to see some stability in the risk, and they may reopen those particular zip codes if, as long as they see some profitability in that area, or they don't see any more losses in that area. So sometimes we just have to wait for the carriers to come back. And I do have one carrier that, they are a really high tech company, and they are like, hey, we're willing to do business in some high fire zones. We just have to take a look at the location, and then we'll let you know. But
Interesting.
yeah. So this one just came out early this year. They, said, hey, we're willing to do business. And they've been doing business for the last 2 years, but now they're willing to ramp up and get to the point where they're open to the public now.
So there is a question on here. It says like this person asked how many carriers have left California, and what is the California Insurance Commissioner doing about all these carriers leaving California?
The Department of Insurance has been fighting with the insurance carriers since 2019. So it's not just the homes right now. At end of 2022, the auto insurance carriers are also leaving. So it's putting us into a very, very huge bind. It almost takes the consumers to yell at the Department of Insurance to move ahead, to play nice with the insurance carriers, to work to some understanding. But yeah, there are carriers that are leaving the state of California due to the massive losses, since we've been collecting them since 2018, right? We haven't stopped. And a lot of people don't understand that the homes, not only was the homes that were burning, but the autos were too. Because if I were running away from a fire with you, Helen, you and I would be in one of the car. We wouldn't take all 4 cars with us, right? We'd be like, I want to keep my eye on you. So let's get into one car and let's leave. So the house burned down, but also the 3 other cars burned away too. Right?
Yeah.
I don't understand that. But yeah, it's going to be very interesting this year. Not only the homes, but also the autos. But there's a lot of carriers that are leaving.
Oh my goodness. It's tough.
Okay. Well, how do we optimize our policies People are like, we're in this situation now. Not only our auto insurance is going up, our home insurance is going up. I always tell people bundle it. Bundle it with your, home and auto. Try to bundle an umbrella with it. If your carrier, ask them about affinity discounts. Your occupation. It might be the engineer, the scientist, attorneys, or the fire fighters. Whatever affinity discount that they might have, ask them about it. Okay. Home safety discounts, burglar alarms, fire alarms. Even if the burglar alarm is a local alarm system that you turn on, that might even be a discount. Fire sprinklers, any homes that are built now, they all have fire sprinklers, right? So just make sure that these fire safety discounts are being applied. New home buyer discounts, right? If you're a new home buyer, you have 3 years of discounts. So make sure that tell them, hey, this is a purchase transaction. I'm a new home buyer. I want that discount. If you do any home updates, roof, heating, plumbing, electrical, let me tell you, the roof update can, shave off a little bit off of your premium. So tell your agent, hey, I just got a new roof, or I have a new heating or plumbing. I redid the whole thing. See if that you can apply a discount for it, right? And the last way is raising your deductible. Maybe you don't want to have it at the $1,000, raise it up to 25. We want to use our insurance for the big stuff, not for the small stuff, right? So raising your deductible to 2,500 might be more suitable for you, right? As long as you can afford it. So everyone has their own personal feeling about, deductibles, but just look at your situation and see if that's worth your time. Okay.
We have a question that from Mercy asked, how to receive the replacement cost for a property?
Your insurance agent should be able to give you a replacement cost calculation. So it's, they should be able to give you the, printout of it, how they made that calculation for you. Because I do that for all my clients when I'm, calculating the replacement cost. And, usually I'll send them a PDF of, that particular house, and they, so you can review it. Sometimes like Allstate will have like, when your renewal comes up, they might have that replacement cost pages inside your renewal. And then you want to look through it and make sure that it is correct. It's not 2 sliding glass doors, it's 1. It might be, they don't even have skylights in there, but you have 3 skylights. You want to make sure that it's in there. So make sure you're reviewing things with your insurance agent, and making sure that the information is correct. Even the square footage could be incorrect, right? You might have added a square footage, right? And you didn't tell them.
And if you have remodeled your home, then you need to talk to your agent again and to update your policy.
Yeah. And a lot of people did that during COVID, right? They were like, I want to repaint this. I want to add this. I want to, redo my sliding glass door. I want to add this because I need more room because I want my own office now, right? So if you've done those things and you didn't tell your agent, you better go and tell them, because let me tell you, inflation is killing all of us, but it's also going to be, if you don't look at your policy, you might be short, right? You're not going to have enough coverage, and then you'll have half a house left. So.
And someone asked, what exceptions should we be on the lookout for?
Exception as in what?
Yeah, if you don't mind, elaborate on your questions. What kind of exceptions are you referring to? Well, hopefully they will type it in. But this is a lot of information. All I kept thinking about is that, okay, I bet a lot of people didn't know that they don't have flood insurance. And actually, if you don't mind to clarify one thing, is that we just had rain, right? And then that caused all this flooding. But then I know you mentioned that your regular home insurance policy, besides fire, there is some kind of weather related type of coverage as well.
Yeah. So if you have we've got a lot of rain and it damages your roof, pops a leak and stuff like that, then that's covered, right? But when we're talking about flood, it's really about the water collection, right? Where there's so much water inundating your property, where, now you've got flooding into your basements and, or it's rising up into your house, right? I had one client call me up and, oh my God, his house the first floor was flooded, because he lives right next to a river. The river rose up and it went right into his house. So that's flood, right? But when we're talking about heavy rains coming down, breaking a leak in your roof, that is part of your home insurance, right? Or if your water leak happens because of pipe breaking in your house, that's part of your home insurance, all right? Or it could be hail damaging your roof and punching a hole in your roof. That's part of the home insurance.
So even though the flood caused by weather-related rain, but that does not cover because it's actually the water rising up and it's not just causing damage for like leaks and stuff like that.
Yeah, so it depends on how it's coming in, right? But if it's a lot of water inundation, right? Water runoff or collection of water that is around your house, that's typically your flood insurance. Okay. But anything else is typically your home insurance that would start covering.
Got it. Okay. So we do have a clarification here. He or she meant exceptions being items that are not covered.
Okay, so yeah, so it would be all dependent on the type of policy that you're getting, right? Like the DP1 usually has named perils. So inside your policy will tell you exactly what is covered, right? Whereas the DP3, when it says open perils, they'll tell you exclusions, right? They'll tell you what those exclusions are. So every carrier has their differences in their policies. So you want to make sure you go back to your policies to read, what they are. Okay. I can't tell you, like in general, like most general home insurance policies are your fire, your wind, hail, storm type of stuff, right? The acts of God typically is covered. But the exclusions might be, other things, right? So yeah, it's a long list. It'd be a nighttime reading scenario. But
yeah, for example, there are some homes that have the wood shaker roof. And we see that a lot of insurance companies, they say like, no, we don't insure the house with a wood shaker roof unless you replace it.
Yeah, that is a big issue, especially here in, Santa Clara. We still have a lot of old homes that have the wood shake roofs and stuff. Definitely in the past 5 years, a lot of carriers have walked away from wood shake roofs. They want nothing to do with it, right?
Even if you're not in a high fire risk area.
Doesn't matter. They just don't like it.
Yep.
They just really don't like that because it's just, there's too many things that could go wrong with a wood shake roof, too much risk for them. They know this statistically, that is, more losses than they want to take. So there's still a handful of carriers that are willing to take it as long as the roof was inspected or it was new. So you have to be very careful with that. You have to talk to your insurance agent about it. What are their underwriting guidelines around that wood shake roof. And, if you definitely have one and they don't take it, and when you do replace it, then you might have like 10 carriers. Right now, there's like, for me, I only have a couple carriers that are willing to take that wood shake roof. And it really narrows the scope for buyers in general, right? You just don't have that ability to look at all the other carriers, right? But so it's important to, if you have one of those wood shake roofs and they're older, just get rid of it, get a new roof. Then you have like 10 carriers that are willing to take you.
It is important to know this before you buy a home. Like we usually mention that to our clients is like, look, you might have a hard time finding a carrier who is willing to insure this house because it had a wood shaker roof. So that's a really good tip. And then kind of want to go back to that high fire risk area because I know this is a big topic. So many people have their insurance policies canceled, no matter if it's a single family house or condominiums, in the complex. So you mentioned earlier that they should, of course, start looking around, but I feel like a lot of people just don't know who those carriers are, right? They just know the big names and they're like, who else should we call? So what would you suggest them to do?
Definitely, so State Farm is one carrier that has been doing quite a bit of high fire, okay, mostly owner occupied. Okay.
Mm.
But you have to double check with them and make sure that maybe their guidelines have changed, right? Unfortunately, for people who are in these zones, you're going to have to do a lot of shopping. You have to do a lot of reaching out, talking to your friends, asking them, who their insurance agents are, maybe even talk to your neighbors, right? That are going to be your new neighbors. Where are they getting their insurance, right? And, if you don't know the brokers, get to know a broker because they'll have a lot of resources, right? Because they are working with a lot of different insurance carriers and they can give you a lot of different options. And of course, once you get down to it and you lose all the options, then the California Fair Plan is going to be the last resort, right?
Mm.
So you just have to have an arsenal, the real estate agents, mortgage brokers, they all have to have some arsenal of insurance agents out there that they can pull from to being their resources, right? So I have like one agent who sends me all bunch of properties all over Santa Cruz. How about this one, Michelle? How about this one? And, sometimes I'll do the shopping and I'll reach out to my colleagues who are part of Farmers and State Farm, and I'll ask them, I say, hey, can you guys do this area? Is this zip code okay with you guys? They'll let me know. And then I'll put the client or the realtor in touch with that colleague of mine and they can further conversation with them. So
Yeah, it's very heartbreaking. And can you give a sense for those people, maybe like, hey, if you regularly, we see a lot of insurance policy, maybe, $1,000 range. If they cancel and you have to really go to California Fair Plan, how much more are they expecting?
So it depends on that location. It can go up to, I've seen like 2, 3, 4,000. And that's just remember, California Fair Plan is only about the fire. Okay. The fire portion of it. So you would have to bring up, the companion policy, which is what we call the difference in condition. They will cover everything else other than the fire. Okay. So you have to put these two policies together to make it like a regular home policy.
Yeah.
So it's not just the California Fair Plan, which is, $2,000 to $3,000, $4,000, but then you have to bring in the difference in condition companion policy, which could be another $1,000 to $2,000, depending on the carrier. And again, they all look at the dwelling coverage, they look at the location to come up with that actual premium, right? So so you're not just buying the California Fair Plan, you also have to get the companion one. Just to make a note of that one.
I think it is really important to note is that really talking to an insurance agent like Michelle can really explain these options and making sure you are well protected, because like so many times we just hear our clients saying, oh, we're just picking the cheapest one. So, well, did you look at the policy? Did you look at what's covered and what's not covered? Are you sure that's enough? And really not just looking at how much premium you're paying, but really looking at if you're well protected or not. Real estate is just very expensive, and it is very expensive to lose if you don't have a appropriate policy that covers everything. So I know there are still probably a lot of questions. I still have a lot of questions I want to ask, but it is 5:16 now. We started late and we ended a minute late. But thank you so much, Michelle, for coming on and explaining insurance policies. And maybe we need to do another segment where we just talk about flood only, talk about fire only, and talk about earthquake only.
For sure.
Oh, thank you. And thank you everyone else for attending this. And I hope I'll see you guys next month. See you later. Bye-bye.